AMD stocks collapsing after Q4 earnings makes absolutely no sense. Let's start with the facts. AMD beat expectation on both earnings per share and revenue. Total revenue came in at $10.27 million, well above the $9.77 billion analysts were expecting. And yes, about $300 million of that came from MI308 chips sold to China, revenue that analysts hadn't modeled and that wasn't included in consensus estimates. But even if you strip that out, the quarter was still strong. Looking forward, AMD also beat expectations for Q1 2026 guidance. The company expects around $9.8 billion in revenue plus or minus $300 million versus expectations of roughly $9.38 billion. So why did the stock sell off? Most likely because guidance implies a sequential revenue decline quarter over quarter. But here's the key point. That decline has nothing to do with weakness in AMD core business. It's driven by the client segment, which is highly cyclical and always sees a drop from Q4 to Q1 due to seasonality. People buy PCs during holidays. This pattern repeats every single year. Meanwhile, Lisa Su explicitly stated that the data center segment will grow quarter over quarter, and that's the segment that actually matters. In Q4 alone, data center revenue reached $5.4 billion, up 39% year over year. That's not a slowing business, that's acceleration. But as strong as the numbers are, this earnings report is not the real story. The real story starts in the second half of 2026. Lisa Su has repeated this multiple times. H2 2026 will be a true inflection point for AMD. That's when AMD will launch the MI450 series and, even more importantly, its first full rack scale solution, Helios. This is the moment AMD transitions from being perceived as a chip company into a full stack AI infrastructure company, capable of competing directly with NVIDIA. And this isn't just about raw performance. The MI450 architecture and Helios are expected to offer significantly higher memory capacity than NVIDIA's upcoming Rubin platform, which is absolutely critical for inference. Inference is where the real AI market is headed. Training is important, but inference will be at least 10 times larger over time. As AI moves from single chatbot to image generation, video generation, autonomous agents that take action on our behalf, models will consume exponentially more compute and energy. In a world where AI models are increasingly similar in capability, the decisive factor becomes cost per token. Who can generate tokens at the lowest cost? Who can make AI economically sustainable at scale? And this is where AMD appears to have a structural advantage. NVIDIA remains the undisputed leader in training, but in inference, the market that will ultimately be much larger, AMD is positioning itself extremely well. And here's where things get really interesting. Starting in Q3 2026, AMD will begin deployment of the first of 6 gigawatts under its agreement with OpenAI. Each gigawatt is expected to generate roughly $25 billion in revenue for AMD. Let that sink in. AMD generated just under $35 billion in total revenue in all of 2025, and this alone represents a massive inflection point. And it doesn't stop here. During the earnings call, Lisa Su confirmed that AMD is in active discussion with multiple customers for additional multi-gigawatt deployments similar to the OpenAI deal, all based on MI450 and Helios. At the same time, hyperscalers have indicated that they plan to spend roughly $700 billion in capex in 2026, with the vast majority going toward AI accelerators from NVIDIA and AMD. Against this backdrop, Lisa Su reiterated that AMD expects data center revenue to grow at over 60% annually over the next 3 to 5 years, and she didn't rule out exceeding 60% growth as early as 2026. Given what hyperscalers are planning to spend, that doesn't seem optimistic at all. In fact, it seems conservative. On top of that, AMD expects total company revenue to grow at a CAGR above 35% over the same period. Taking all of this together, it's very hard not to be bullish on AMD. Q4 2025 was solid. H2 2026 is shaping up to be transformational. I'm increasingly convinced that AMD will become a multi-trillion-dollar company over time. And that's why, even though AMD is already one of my largest holdings, I had it more aggressively during this recent dip.